Hi there, this is Chris from MoneyHub, and this video looks at business loans. We've prepared a comprehensive comparison guide, which I've linked to down below in this video. You can read through this, but this is going to be the contents of the video. So without further ado, I'm going to explain what we'll cover. So first of all, we're going to look at whether or not you can get a business loan and what you need to provide. Second to that, we'll look at the interest rates, and then we'll look at the different types of business loans. We'll look at the pros and cons of business loans as well as the alternatives, frequently asked questions, and then we'll just do a brief summary of some lenders and what to look for and what to watch out for. So, without further ado, the first section here is looking at, can I get a business loan? This is a really important first question. The actual answer is it depends, because a lot of lenders need information which you may not be able to provide, especially if you're a new business or have been trading for less than 6 months. So, generally, you'll need to provide your personal credit history. You'll need to provide your business bank accounts. You'll need to show them balance sheets, cash flow statements, profit and loss, all that sort of thing. But you'll also need the bank statements for your business for at least 6 months in most cases. What lenders are going to be looking at is they're going to be looking at your debtors, so the people that owe you money, i.e., your customers. And so if you are a new business without debtors, or debtors aren't really a thing to do with your business, then that places some risk for the lender, or some more risk, because there's going to be a lack of flow of money to be able to repay a debt. So the best thing you can do is really be realistic about whether or not you're likely to get a loan, just on a general sense check. They're not going to fund new businesses. This is just for established businesses who've been trading for at least 6 months and have at least $10,000 turnover per month is kind of the standard, but it does depend. So with all that being said, you make sure that if you are going to apply for a business loan, you look through the requirements very, very carefully. The general processing time is about 1 to 2 to 3 weeks. Once you've provided all your information, there is a lot of assessment around it, because of the high risk. So the answer really, can I get a business loan? It is it is all going to depend on what information you provide, the nature of your business, and basically how realistic you are to be able to repay any loans which are given. So the interest rates is going to be driven by, or what interest rate you're offered is going to be driven by the information that you provide. So there's no fixed rates in terms of, oh well, I'm this business, I get that rate. You'll be offered a very sort of targeted rate, and that will be fixed. It won't be a floating rate. And generally, the terms of loans are between, say, 6 months and 3 years for businesses, with weekly, fortnightly, or monthly repayments. So be prepared with interest rates what they are. Be prepared for at least 10, 12, 15%. That's kind of a reference point in what we see in the market. But things are always changing. And of course, if you are a very developed business with a lot of cash flow, strong cash flow, and you need it perhaps like a business loan to buy an asset, or to shore up some working capital, then the interest rates may be less, but it is all going to come down to what information you can provide. So that's really a summary there. Uh, the types of business loans which exist. Generally, it's going to be unsecured business loan. So that means there's no security over the loan which you draw down on. That's usually a case where you'll have a small amount of loan. It's not going to be so significant, maybe 10, 15, 20, $25,000. And please be aware that whilst it's an unsecured loan, so it's not going to be secured over, say, the company car, or personal property. The risk is, if you don't repay the loan, then you can be put into administration or put into receivership by the lender. So that's something which a lot of people don't really ascertain. A lot of business owners think, okay, it's unsecured. If I don't pay it back, what really is the risk? The risk is that you lose the whole business, or this outside management comes in. So this is the issue with unsecured lending, is that there are sort of sort of catastrophic results or consequences if if debts aren't repaid. So further on from that, secured business loans, that's when you take out a loan for your business and security attaches to it, meaning that it'll be on your car, it'll be on your house, or something else like that. So if you don't repay the business loan or if it gets behind, then the lender can call on the loan and on the security and basically take it from you because they have the right to do that. That can be very disruptive, but sadly, or fortunately or unfortunately, it sort of really depends where you're at with this. Uh, Secured loans are generally the most common business loans out in the market, just because there's a whole bunch of debt out there and just because lenders don't want to take too much risk. So that is something to be aware of, that if you are looking for a business loan, whilst you may see promises or advertising of unsecured loans, a lot of people will be taking a secured loans as part of the package, just the way it is. But of course, there are always alternatives, which we'll get to down below. Now, lastly, there's also peer-to-peer lending. This is, this can be either sort of unsecured or secured. It really depends on what peer-to-peer lender you work with. And that's when you apply to a website because all these are online. You say, this is my business and basically I want to borrow a personal loan for my business, and then you present your information and then people can decide whether or not they'll fund it. There used to be a lot of peer-to-peer lenders uh, for whatever reason, usually cost of regulation, cost of compliance, cost of like keeping the systems up and running, and servicing borrowers and lenders and everything like that. There's a lot less now. But one example would be Lending Crowd, but there are others which are out there to offer loans through their service. So they're not a sort of typical street or sort of lender that you'd see advertised on TV or anything like that through the business section of the paper, uh, but they do exist, and of course we've profiled them in our comparison. Now, moving on from that, let's have a look at the pros and cons of business loans. So, business loans, they offer a repayment certainty. So that means when you sign up, you've got exactly the fixed interest rate which you'll be paying. You've got the fixed repayment period. It could be 6 months, 12 months, it could be 2 years, 3 years, etc. You know exactly what you'll be repaying, whether or not it's every month, whether or not it's every week, and basically that won't change. You need to cash flow manage that out, and that's really important that you always stay on top of their repayments. But if you can, then they're a sure bet to finance your business. And then once the debt's repaid, hopefully your cash flow position or your funding is through the worst, and then like business life carries on. Second to that, like another pro, there are some business loans with floating interest rates. Now that's not so standard, but they do exist in some instances. They are a little bit risky if the OCR, if the official cash rate is moving, because certainly if it's moving up, but you can win if it is moving down. So, of course, we can never know what it's going to do. And usually, business loans are like 6, 12, or 18-month or 2 year things. So, very, very unsure, where things will be in 12 months or even, 6 months when you take on a loan. But, just be aware that, these products do exist, but they're not without their risks. Now, repayment terms can be flexible. And so, should you get into some sort of financial issues later down the track, then you can ask for like repayment holidays or you can look at restructuring. You always have to work with the lender. So you have to contact them and be very transparent and very upfront. But it's certainly a pro of being able to, take down a business loan is that, while there may be fees for changing the terms or changing the repayments, you do have the option to at least discuss the matter. And then you also avoid, with a business loan, the need for further investors. So that you don't have to sell your shares, you don't have to take on a whole bunch of, people or sort of other interests or have problems that arise with that, taking a sort of like a business partner or anything like that. You've got control still because the debt is simply it's simply debt and there's no equity. So those are all pros of taking out a business loan, and then we'll just look at the cons here. Cons really are that the terms can be demanding. So that means that you do need to repay, all the time, constantly, and you can never really fall behind on these payments. So you have to make sure that your debtors are managed, that everyone's paying you to be able to pay back the lender. And you also have to provide, financial statements, business updates, a financial stress test, all of that, just to make sure that your, company is solvent, that you're not trading, sort of beyond your means, and that can be a bit of a distraction from your day-to-day, sort of sales growth and things like that. Loss of property as well is a massive risk because if you do find that the loan's unable to be serviced, then if it's a secured loan, they will take the security, i.e., your assets, from you. And at the same time, if you're unable to pay altogether, then as a creditor, they can put you into receivership, which is very, very stressful and completely, the end of often like the end of many a business. So, loss of property and then being put into receivership, these are significant risks and something to be very aware of. Uh, Finally, like another con with uh, business loans will be early repayment fees. Some lenders charge them, like some don't. It really depends on whether or not are you looking for a lender that won't or will, depending on what you foresee your cash flow to be in the future once you've got the loan. So yeah, shop around, do compare because sometimes those with no early repayment fees can also have lower interest rates. So just you have to compare apples with apples when you do your full comparison. Moving on from this, we'll look at the alternatives to business loans. So we've got a separate breakaway video for this, so I'm just going to briefly touch over that. There are 5 of them. So you've got business credit cards, which you can apply to through your bank. You've got overdrafts through your bank. And you've also got, I'm going to jump quickly down to debtor invoicing and cash flow financing. This is also quite common. And if you wanted to then sell shares or give away some equity, then you've also got equity crowdfunding, which is a specialist sort of alternative, but worth considering if you're looking to kind of bring on more people and sort of significantly more money. Second to that, you've also got raising money through general investment, perhaps taking on a business partner. So as I said, we've got a breakaway guide, which is very comprehensive and like goes over those 5 alternatives. Frequently asked questions. So as I previously touched on, you need to provide a whole bunch of information to the lender, and it's best to just keep a file with everything together so that if you are going to like apply to multiple lenders, you have all that information with you so you can kind of speed up the process. You don't have to be looking for all the information all over again. You can just upload it as needed. So yeah, as I said, we do have a breakaway guide for frequently asked questions, but it sort of discusses things like what kind of deposits do you need for loans? Well, short of the matter is you don't need any deposits. It's not like a residential mortgage. There's usually fees of say 1 to 3% or possibly like a cash fee for taking out a business loan. But if you ever see someone offering a business loan where you have to put down 10% to get the loan or anything like that, well, then be very careful because they may just vanish once you've paid the 10%. And we have seen this, in the past, and it's not good for anyone. How much can you borrow really depends on the size of your business, what kind of security you're going to get. Is it going to be secured or unsecured? And what are the terms of the loan that you're looking for? You're looking to repay it in 6 months. Then, of course, the loan is probably going to be lower versus 3 years, where you could take a higher loan if it's affordable and then repay it over that longer period. Lots of sort of questions there about the interest rates. They're driven largely by how much you can afford and the purpose of the loan and your general business. And then looking at what happens if you can't repay, then the answer really is you must contact the lender and you must contact them well in advance of not being able to make a payment, because then they can work with you, they can manage it, they can help you, but they're not going to be able to help you if you just don't if you don't communicate with them. So that's pretty much a summary of the FAQs. And then what we've done is we've just done a summary of all the lenders here. So you've got your traditional banks, and what we've done is we've done what the loan fee is, what the interest payments are, and then looking at like what the loan terms can be, how much you can borrow, what's the minimum. Then we've also linked out to the different lenders. So we've broken it up in between your non-traditional lenders. So these are your challengers, and often these people are more willing, perhaps, than traditional banks to lend. Uh, and that's not like a criticism of traditional banks. It's just that some banks aren't as dynamic or aren't actually focused on lending as much as these challenger sort of specialist business lenders are. Saying that, they're not without the risks. Many business lenders, both traditional banks and challengers, will put businesses into into receivership. So please be very careful before making any application, because if you do get it wrong, or it's not suitable for you, or you under loan, or you take out too much, or anything like this, there's so many problems that can cause much larger problems, which can so ultimately affect your whole sort of business existence. So do be very careful, and comprehensively look through our guide. We've got some related guides which are well worth looking at, especially around ways to speed up the collection of invoicing, so debtors paying you. So that's one that I would suggest people have a read of. And if you do have any specific questions, please let us know. You can write a comment below. We're very responsive. We love to improve our guides. It's very important for us. So please do leave a comment down below, but also you can write to us confidentially through the contact section of the MoneyHub website, which is linked down below. Thank you very much for listening, and if you do have any questions, we are here to help. Thanks.